All right, welcome everyone for another episode of Daily Rates Live with the Mortgage Calculator. We are a lender and mortgage broker in over 20 states with over 200 licensed loan officers. So if you see any of the scenarios you'd like a full breakdown on today, please get with any of our team members. We'd be happy to send you the full itemized loan estimate. But what we do every day, we'll review the markets in general. Today is a great day as rates have dropped. And then we'll go into a deep dive in one of our unique programs. Today we'll be discussing our 1099 only loans, our non-QM programs, where we can just use the 1099 statements, which are very helpful for self-employed borrowers in today's economy. So let me go ahead and switch my screen and we'll get started with today's episode. So as we mentioned here, today's been a pretty good day for rates overall. The 10-year Treasury is definitely something we always want to look at, which generally tracks best with rates overall, especially when we're talking about different loan programs. But today in specific, there's been a lot of news and a lot of movement in the mortgage markets, so definitely a great day. And we always want to put this into perspective here. In the last week, we've had a little bit of up, a little bit of down. But over the last year, we're at pretty much one-year lows, and actually mortgage rates in particular have just hit around 3-year lows just this morning. So definitely a great day for us to talk about rates. And now we'll look at our specific loan programs here. So I just updated this a minute ago. I'll probably continue to go in a downward direction today, which is amazing. But as of just about 10 minutes ago, these were our live rates for a standard scenario: a single family home, $500,000 purchase price, $300,000 loan amount. Corresponds to 60% loan to value, 760 FICO, 40% net to income ratio. That's the settings we use to compare all the different loan programs. There's over a dozen programs here on this page, but we'll talk about our standard ones here that we review every day. So our conventional options for a primary home, standard 30-year fixed, what you think of when you think of a mortgage. Rates coming in today, pretty amazing, 5.625, quite a bit lower than it's been the last couple days. And final APR, they're coming in at 5.881. And I expect that will still continue to trend downward a little bit more today. And if our borrower doesn't qualify for a conventional option for any reason, typically we want to explore an FHA option, which allows more leniency on credit issues, a little higher debt to income ratio, and does require upfront and yearly mortgage insurance, so it does have a little bit more cost. But our standard option for FHA coming in at 5.125 rate. But when you add those additional costs, the final APR comes in 6.011, and I hope to see those trend downward today as well. Our VA options for our VA eligible borrowers, amazing, coming in at 5.25 today. Final APR 5.489 because the VA programs have much less fees than any of our standard programs. So the rate is much better overall when you compare the APR. And our USDA for properties in USDA areas, those rural areas of the country, USDA programs, if the borrower is eligible and the property is eligible, these are great to consider. Coming in at 5.125 today, final APR 5.791. So our borrowers going to typically compare that to an FHA or a conventional option, and USDA may be the best option if it's in those areas. And where we love to shine here are non-QM options. Definitely a change from the last episode just the other day. Hopefully this continues to go down as well. Non-QM alt doc options to use alternative docs such as bank statements, 1099s, our topic for today, P&L statements, all kinds of different options here. Coming in today, 5.875, lowest rate option. Final APR there, 6.145. So a little bit higher than conventional, but very amazing to have something under 6. Been over 6 for quite a while. And our non-QM alt doc options can be used for investment properties. We'll explore that today as well. Rates today for 6% flat. Final APR 6.321, much less than it was the other day. And conventional options for an investment property, same rate there, 6%. Final APR 6.311. Typically, that's what we see, the conventional option, just a touch cheaper. And one of our favorite options, our DSCR, debt service coverage ratio, no income or employment information needed for these investment property loans. These just consider the income from the rental property to determine a DSCR ratio. If the estimated rents can cover the expenses, that's a ratio of 1 or higher, aka the property cash flows. That's what we set for these scenarios. And this includes a standard 3-year prepayment penalty, which is pretty standard for these more commercial type loans. Rates today come in at 5.999, final APR 6.222. Hopefully that goes down today as well. And we can add a 5-year prepayment penalty to lower the rates a touch. 5.875 lowest rate option, final APR 6.181. And there are options for no prepayment penalty coming in at 6% rate. Final APR 6.321, just a touch higher than our conventional options to use that DSCR program with no prepayment penalty. And we have dozens of other options here: commercial, SBA, fix and flip, land, rehab loans, all kinds of different options. But let's get into today's topic. And first thing we want to look at is an actual property. So I pulled up something nearby here that's listed for sale. Nice house with a nice pool here in Florida, right by the beach. And to explore our 1099 topic for today, it's always helpful for our non-QM options to explore something with a little higher price that would be unattainable in some cases to use a conventional loan. So this property is listed at 1.1 million. So it's going to be difficult to use a conventional loan because we'll hit those loan limits. And if our borrower is having some difficulty proving income with tax returns, we can sometimes just use the 1099s to make it much easier. That's where these non-QM programs come in. So our first option here, if our borrower wants to purchase this exact home, 1.1 million, and use only 1099s, we can do that here with our non-QM alt-doc option using just 1 year of 1099s. Or this works for our borrowers that are gig economy, Uber drivers, maybe a real estate agent, very common. They usually get a 1099 for their income at the end of the year. And we can do as low as 10% down payment. And it's very simple to calculate the income. We can use 90% of the income that's listed on the 1099 and just simply divide that by 12 to get our monthly income, and then do a pretty standard loan here. So rates for this option today, let me zoom in just a touch, as low as 6.999 for 2.5 discount points and costs. And our par rate option here is 7.875 at 0 discount point cost to put just 10% down using just 1099 statement if it's just one, or multiple. Perhaps if you're typically we'll see like an insurance agent might work for multiple insurers and get 1099s from multiple places, but they're still doing the same job. Very common. These programs are pretty simple once we just get those 1099s. And you see our standard settings here. We're using that 760 FICO credit score that we were estimating before for all of our scenarios. Now, if our borrower was looking to purchase this home as a second home or vacation home, we can still use those 1099s. And we just have to edit this to 15% down payment because we're putting it as a second home. Still the same calculation method. We simply use 90% of the 1099 income divided by 12 as our monthly income for this loan. And let me expand this a little bit here. Lowest rate option, 6.99 for 2.125 discount points of cost. We're putting a little more down payment, so it's actually a little bit cheaper there. And we even have an option with a lender credit, 7.875 rate in this case, gets us a 0.25 lender credit. Again, because we're putting a little more down payment here. We're putting that 15% down because we set this as a second home, you see here on the settings. And we're just simply using 1 year of 1099s. And the final option we want to explore is if our borrower wants to purchase this as an investment property. Again, we can use all of these same options. And pretty cool, we can put just 15% down payment when we flip it to an investment property. And we actually have some pretty amazing pricing here as well. So we can buy it down a little bit more. So we can actually get it down to 6.375 for 3.125 discount points of cost. A little bit spendy there. But we have an option here at 6.875 rate for 1 discount point of cost. And again, that's to put that 15% down payment in this example. And we switched it to an investment property occupancy here. So a couple great options to use 1099s. Very simple calculation. We just grab our 1099s from our borrower. We verify that they are employed in that industry with some other documents. And we simply take that income times 90% and use it for monthly income. So very easy calculation there, and again, very common for real estate agents, insurance agents, Uber drivers, or other gig economy workers. So definitely would love to help anybody out that needs a full quote. Again, we're licensed in over 20 states with over 200 loan officers. We'd be happy to send that. Visit our website, mortgagecalculator.com, or drop a note here in any of these chats, and we'd be happy to get you that info. So I hope everybody is out there looking for homes today. Rates are continuing to drop. The news is great. Go ahead and get out there shopping and have a great weekend, everybody.